setting up your account. Pretty basic. Just jump on the BitMEX website. I think we sent a link in the email. If not, you can just jump on Google and find it. Just click on register. Same as any other thing. Your email, your password, your name. Click register. First thing I suggest to go to. Once you register, you'll be sent to this screen here, which is quite confusing at first. You don't really understand what's going on. That's fine. Don't stress about it. Up here, you've got your account. Click on your account, and it will go to your wallet balance and give you the option to deposit and withdraw funds. Before you start moving money around, click on your account on the tab on the side here. This normally just has all your basic details, but here is where you enable the two-factor authentication. Definitely worthwhile setting that up just for security. Once you've done that, you're ready to go. Click on deposits, and it spits you out a Bitcoin address. Now, you can only send Bitcoin to BitMEX. They don't accept Litecoin, Bitcoin Cash, US dollars, nothing like that. It's only Bitcoin. So make sure you're only sending Bitcoin. You can send it from any of your wallets, exchanges, doesn't matter. They confirm it after the transaction goes through after one confirmation as well, so it's quite quick. Minimum deposit is 10,000 Satoshi, which is almost $1 Australian. Yeah, that's about it for that.
And like we said last time, don't ever scrimp on that 2FA. Just the first thing you should ever do is just jump straight in, 2FA, make sure you've got all your details either printed out. Like we said on Tuesday, there's a really good online vault essentially that I use called One Password. It's the digit 1 followed by the letters password. It's an online vault and you can store your details in there, but always have your security details printed, saved, locked up.
Yep. Right, once you've transferred some funds over, that might take 10 minutes, half an hour. Once you've got your funds ready to go, it'll display up in the top corner here. It'll display as XBT. XBT is just BitMEX's version of Bitcoin or BTC. So it might be a bit confused and you might be thinking you've lost your money or whatever. It's still Bitcoin. It's just listed as XBT. So if you sent one Bitcoin, it'll show up as one XBT. Once your funds are transferred and you're ready to go and you want to go have a trade, click on the trade button and that'll take you to the trading interface. And we'll get started on that now. So this is pretty much what you're looking at when you first jump into the trading interface. This is where it all gets a bit confusing with all these numbers here. It's not what you're normally used to. We'll get into all these in a second. Your interface here comes default with the order book, your basic charts, which are run under Trading View. So you've got all the same features, tools and indicators and everything as Trading View. I think from default, you won't have any of your tools here. You'll have the option for your indicators and your time frames and things like that, but you won't have your tools. All you have to do is click on the full screen button here. It takes you to a full screen version of the chart, and then you've got all your tools here. What I like to do is just go through all your basic tools that you like to use and click them to your favorite so it sits up in this thing. And then when you go back to your smaller screen, you should have your favorites tray here so you can quickly get to what you need to do. Don't worry about having too many things up here. Normally if you're scalping the smaller time frames and stuff, you don't really need to use a lot of tools, simple trend lines, and finding channels that the price action is sort of bouncing around in. If you want to check your range to see what sort of percentage gains and things like that you can make. So you don't have to go too fancy with your tools on your chart, especially in this little screen. By all means, have a Trading View chart open and use that when you want to get into depth with it. This is more so just when you're going to jump in and out of a trade.
And Don makes a really good point there as well too, Don. You know, you look at that time frame there and how many times that price has bounced in between that channel, and it's simply just lines of support and resistance. So definitely don't mistake how powerful those tools can be, and really is on these small time frames in particular. Just keep it very simple. Just use the basics, and you'll be surprised at what you find.
Plenty of potentials to make trades here. Bouncing around in a 4% channel, which normally you would think that's probably not even worth worth jumping into. But when you're leverage trading and you're 10 times or 25 times, even 100 times, that 4% channel turns into 40%, 100%. So it's quite a substantial channel there that it's currently been bouncing in for the last couple of weeks. Anyway, we'll move aside from that. So you got your chart here, your depth chart, which is basically just your order book in a visual representation. The column at the side of the amounts. So there's 7.2 million contracts in the order book for longs, and then your shorts are on this side. And then the price obviously comes down in the middle where they meet and slowly changes. Recent trades, which is trades that have just gone through the book that have been confirmed. And then down the bottom, you've got your positions. Currently, I'm not in a position, so it's just blank. Once we jump into a position and we've got a trade up here, then we'll run through all the different features there. The interface is customizable, so you can move things around, change them how you want them. I tend to delete a lot of stuff. I don't really need to know recent trades, so I don't use that. The order book I normally keep, but I don't need it that big. I normally stick it over here. This is just a matter of preference as well. Don't need the depth chart because normally you've pretty much got, if you can see these green and red sliders here on this price, that's pretty much a visual representation of the depth chart anyway. So I normally go nice big screen on my chart, and then I've got my tools here again because I've gone bigger screen. It just gives me something nice to really play with. Right, so moving on, up the top here, all your different tabs. These are the different contracts that are available to margin trade. So we're on Bitcoin perpetual contract at the moment, which is a never-ending contract. So it just continually goes. You can go short and long as many times as you want in a day. These are your futures contracts. So you've got a few different ones here you can run. These are end and start dates on a trade. So you normally pay a fee at the end of the trade rather than every time you do a trade like you do on a perpetual contract. Also on that, perpetual contract, because it doesn't end, you have a funding rate every 8 hours. So normally on your futures contracts, you pay a fee at the end of the close date. With the non-stop contracts, you pay a fee every 8 hours. All the contract details are listed down here. And you can see, I don't want to put my mouse on it, but right there, it says funding rate in 2 hours. So it's every 8 hours. So in 2 hours, there will be another funding rate. And at the moment, the funding rate, it changes depending on the interest and everything, on how many orders there are and the income of the exchange at the time. If they're at the time of funding, if there's more long orders in the book, then the longs will pay the shorts the fee. So the fee might be, well, at the moment, 0.0161%. So if you're in a long position, you would then pay the short position a fee at that time. If you're in a short position at that time, you would get a rebate off the longs, depending on the size of your current position that you're in. Down here where it's, at the moment it's negative, I'm not in a trade, so it's not coloured. Normally, if it was negative, that obviously means I'm going to have to pay a fee. Sometimes it'll be highlighted green, and that means you're about to receive a rebate. If you don't want to pay the fee or be in a trade during the funding rate, you've got about 30 seconds to get out of it before the funding rate. So if you just keep an eye on it, if it's down to like the last 30 minutes of the funding rate, maybe jump out of the trade and just wait until it's over before you jump back in, because you will be charged a fee if you're in the wrong position. Now you can trade alts, Cardano, Bitcoin Cash, EOS, Ethereum, Litecoin, Tron, and Ripple. However, they don't have high as leverage as what Bitcoin does. I think they have a max of about 20 times on most of them, I believe. The other thing with alt trading at the moment, with such low volume in the market, it's very, very slow. So there's not a lot of price action. So if you do take a trade, you're going to be sitting on it for a few days. If you're sitting on it for a few days, you're going to be paying some fees. EOS,
and Don, do you think as a trader, I think it's something that we see pretty commonly, especially for newer traders, they don't understand how much volume buying or selling volume has on the market. You might look at a coin and go, it's ready to moon or it's going to shoot up, but with such low volume, especially across the whole market, it's just unlikely. So this is where
100%,
something like BitMEX comes into play, where the swings that you typically see on those shorter time frames can really equate to some good profits if you know what you're doing. And then when Don starts going through leverage, even though it was only 4% swings in that channel we looked at beforehand, when you times that by this leverage, it's really something you can be you can do quite well in if you know what you're doing.
Yeah, 100%. Yeah, definitely with the volume, it's always something I look at whenever I'm jumping into a trade, even if I'm just alt trading. If there's no volume, there's a lot less chance of a rise really playing out. Even it can look so good, all your indicators can look bullish as you're on support and you're ready to bounce. If there's no volume, it's not moving. And even if it does start to slowly climb, that's like as much as the bulls have got, and it will just tank as soon as they run out of steam. So always pay attention to volume. That's why at the moment, trading these alts with leverage trading, it's probably not a good idea because there's just no volume. So if the trade does go bad, you might find it hard to exit because the volume's too low. Now, getting on to fees, up here in references, you've got FHQs and a few other bits and pieces of details here. On to fees, explains your fee rate here. So for Bitcoin perpetual contract, it is 100% of your leverage, which means your fees are on your overall order, not what you're risking. So if you put in $100 and borrowed 100 times, you're not paying a fee on the $100 you put in. You're paying a fee on the whole amount you're borrowing. Now, the difference between a market maker and a market taker, it's ideal to always be a market maker. If you're a market maker, you actually receive a rebate of 0.025% on your trade. As a market taker, you pay a fee of 0.075, and that's the same if you are if you take a market order. So if you market sell or market buy, you're going to be paying a 0.075% fee on the total amount that you're borrowing as well. Here's your long and short funding every 8 hours. Like I said, that changes. I think if you look further into funding, they mention the interest rates and everything that it does fluctuate. So I tend to just pay attention to when the funding times are coming up and try and exit a trade beforehand, because unless I'm getting paid a rebate, I don't want to be in it. So that pretty much covers the fees. And I'll explain how to become a market maker and a market taker. So a market, for these people who don't know, a market maker is somebody who places an order into the order book. So that means if you wanted to go long right now, but you wanted to buy it down here, you would place an order in to buy Bitcoin if it gets down here. That would put your order into the book. And now you're a market maker. You're applying liquidity to the exchange, which increases their market volume and everything. If you're a market taker, that means you're buying it at the current price or somewhere off the order book. You're basically buying one of these contracts that are already there. So these are people who have already said, I'm going to go short if the price gets up to here. Well, I can go in and buy their order and instantly enter the market, but then I'm a market taker, so I'm going to pay that 0.075% fee. So I always try to become a market maker, and that way I never pay a fee. I think the only time I've ever paid a take a fee is because I've market sold because the trade looked bad and I had to get out quickly. Otherwise, I'll always make sure I'm a market maker, and that way I don't have to worry about fees. If anything, I get a small rebate and it's a bonus. So always pay attention to your price. Try to be a market maker. Let the market come to you, buy your contracts, and then off you go. Same thing if you're going short, you would place your order up here rather than down here, because if you place it down here, you can enter the market straight away at a worse price than the current price, but you're also going to pay a fee. So you'd put it up here and you'd wait for the price to bump up, hit your order, and then you're done. When you do place an order, you'll see it pop up in your order book as well. It'll be highlighted, and I think there's an X there if you wanted to cancel it too. Now, getting on to placing an order, you have limit orders and market orders. So like I said, if you do a market order, this is basically just jumping into the market at the current best price. So if you were going to go long, you would be buying at this price. And if you were going to go short, you'd be buying it at this price. You'd be then paying a fee. So I don't suggest you use market. Always try to use limit to avoid paying any fees. The stop market, this is more for selling or for closing your position. You do have stop limits. trailing stop limits and stop markets, I believe, sorry, trailing profit limits and trailing profit markets. We will go into this in our next lesson, which is more advanced on understanding all the tools and properly placing your trades. So we'll stick to limit orders for now. Nice and easy. Now, quantity, these are the amount of contracts you're purchasing. The contracts are valued at $1. So 100 contracts is $100 US. That will come out of your XBT total. So $100 at the moment would be 0.0153 XBT. So that's how much would come out of my, sorry, if I was doing 1 times, that's how much it would cost, but that's how much I'd be buying, would be 100 contracts would be 0.0153 XBT or BTC. You can buy as many contracts as you want, 1, 10,000, 100,000, just depends how much money you're playing with. Button here to go long, button here to go short. That's to enter your trade. So depending on what you're going to do at the time is what one you would hit. The cost here is something you really need to pay attention to, because this is actually how much it's going to cost you and how much you're risking in the trade. So I said before I was going to buy 100 contracts and it's going to buy a total of 0.0153 BTC, which is equivalent to $100 US and about 140 or so Australian dollars. But that's not how much I'm actually putting up as collateral. I'm actually only putting up basically about 15 bucks. 0.0015 BTC is how much it's going to cost me, because I'm currently on 10 times leverage. So basically I'm going to put up 10 US dollars. I'm going to borrow 10 times that amount to make up 100 contracts. So I'm going to risk losing 10 US dollars, but the order is for $100. The leverage is just a slider. You can just move it around 5 times, 3 times, 50 times. I suggest to start off with, when you first get into it and you're just doing a few testers and you've never margin traded before, to stick to the lower percentages, 3 times, 5 times. Once you're a bit more confident and you've got a good understanding of the market and you know which way it's going, then you can start increasing. I don't recommend trying the 25, 50 and 100 until you're very experienced and you want to take that sort of risk, but always pay attention to your capital that you're actually risking if you get liquidated.
Just on that leverage too, Don, next to the 100x, you have the customize button.
Yep, just here.
Yeah, you can do any leverage that you like. You can, if you wanted to go up to 15 or 10, 11, 12, work your way up.
Yeah, the only reason you do that if you were trying to work out your risk management and you need to know exactly what sort of leverage you need to borrow to counteract your trade. So you don't really have to worry about that. To keep it simple when you first start, you'd be sticking to the 3 and 5 times. This way, it gives you a bigger buffer on your liquidation price. So right now, if we click on 10 times, so we're going to buy 100 contracts at this price. We're going to risk that much money. We're going to buy that amount of contracts at 10 times. Our liquidation price, we hover over the mouse, over the question mark. Just down the bottom there, it says your estimated liquidation price after execution would be $7,194. So let's just put that somewhere at 7,194, somewhere around there. So if I was to place a short position right here, because I think the price is going to go down, and then the price goes up, if the price gets to here, bang, I lose my $10, my 10 US dollars. That's gone. You don't get it back. If I sell it here, that might be, say, a 30 or 40% loss. Well, then I'm only going to lose 3 or 4 US dollars. So you can do that. You can exit a trade before you get liquidated. You don't have to sit there and watch your money disappear. If you think it's gone bad and you've made a wrong decision, you can sell. You can set a sell order. You can market sell. You can counter your trade by swapping it to a long position. You can do whatever you want to do. You can get out of it and minimize your loss 10%, 20%. Doesn't really matter. You don't have to get liquidated. Now, that was at 10 times. That's where our liquidation price is. If I go to 100 times, you'll notice my cost changes because I'm still only buying 100 contracts, but I'm borrowing 100 times the amount I need to get there. So I'm only risking $1, roughly $1, to make up $100. Now, if we put our mouse here, You can see now liquidation price has changed to 6,543. So that's down around here. So you can see now if you went 100 times because you believed it was going to go short, it only takes one little blip in the price to lose all your money. In saying that, I'd only be losing $1. If I wanted to still risk that same $15, then I'd be buying more contracts. You'd be basically buying 1,000 contracts because I'm still borrowing 100 times the amount to make up that money, which means I'm going to risk that same $15 that I was going to risk before. But if it licks up to here, I lose it. It's all gone. So you barely even got time to put a stop loss in. That can be gone in a matter of like 3 or 4 seconds. It's that quick. So I don't recommend 100 times unless you're very, very certain you know what's going on. It shouldn't be something you'd even look at right now. You'd be sticking to the lower percentages. So back on that, let's go to a lower rate. Let's say 3 times. We'll drop that back to 100 contracts, which we're originally going to buy. So if you notice,
sorry, Don, just a quick line of, well, it definitely comes down to patience with BitMEX. Do not rush this. It's all very exciting finding a platform where you can do quite well, if you know what you're doing, but definitely take your time. Do not rush this sort of stuff. Really listen to what Don is saying because it's super simple information, but it's also super valuable. Even experienced traders get liquidated at times when they're rushing. And also just as well,
from these sorts of candles.
Exactly right. Yeah. So those silly market candles that ruin a lot of people.
Mm-hmm.
But Don has also created a really cool trade history profit and loss calculator that we'll send out to everyone after this as well via email. So, enter in your long trades and your short trades and calculate your profits. And when you are starting to make consistent profits, then you can start thinking about increasing that leverage.
Yeah, 100%. Get used to it before you start playing with risking more money. So getting back to this, you notice I'm still buying only 100 contracts, but my cost has gone up to nearly $50. That's because I'm only borrowing 3 times the amount now. Let's say we're going to risk the same $15 that we were going to. So now we would put in something like $30. Yep, there we go. So now I'm only going to be buying 30 contracts. I'm still risking that same $15. If you have a look now, our liquidation price is $9,692, which is way up here somewhere. Oop. Not clicking.
Hey Don, if you want to unblock Seds or unmute him.
Yeah, just in a second, man. So you can see now, at 3 times the leverage, we have plenty of headroom before you get liquidated and lose your bag. So that's why I suggest to stick to the smaller time frames because you've got plenty of headroom for anything to go wrong before you lose all your money. Just a second. I just got to quickly do something. Unmute. Yep.
Hello, everybody.
Hey, Matty. Okay. So getting back to that, stick to your lower time frames and pay attention to your cost price because this is what you're risking if you get liquidated. You're not risking $30, you're risking $15 because you're borrowing 3 times. Stick it on 10 times for now. And we'll probably buy 100 contracts. So buying 100 contracts, I'm only risking about $15. Let's have a quick look. I'll run you through how to place a trade. Brad, what are we doing at the moment, bro?
I'm going to look to go long, trade this channel until we have a breakout.
Are we not
so
at
we've
the top
just
of the channel? No.
No, I'm on the 15. We just touched trend again. So
Where am I?
hang on, where are you?
I've lost it. Unlike me.
Yeah, mine did that. I had to refresh the page.
Oh, okay. Bear with us. There we go. All right. So you're thinking what, 6.6?
At the moment, yeah.
Yep.
6,580.
Okay.
And then
So,
see where we're at.
I'll delete this so we don't get confused. So now to place an order, like I said, I don't want to be a market taker, so I don't want to just jump in at the current price. So I'm going to set an order just a little bit lower than the current price. So I've given it room to bounce back down and jump in. So when did I set that price at? 6522. You can change the price up here on the fly. Am I not going to buy straight away? Nope. So press long. It gives you all your details so you know exactly what you're about to do. Chuck your order in the book. So as you can see now, my order's in the book here. It's highlighted. And I think I can actually, yeah, there's an X there, which is just out of screen. You can't really see it, but you can actually close your order there. And if you notice, when I placed that order, it put this little box in here with a dotted green line. I missed it. Put that dotted green line and my order there. If I wanted to change that order, I can just grab it and move it down. And you'll notice here it's amending. And now my buy price has changed to 6512. So if you saw the candle coming down and coming down fast and you thought, oh shit, this is gonna blow under, I could get a better entry, well then you can just grab it, drag it, move it down, and then wait for your order to fill. This is more of a chase. So right now, because it started to take off, I'm not going to buy it because I think we might hit here and come down. So I might switch it to a short position. So you can just simply cancel that, and that cancels that trade. Now, looking to go short at 6530. What do you reckon, Brad?
That's what I'm going to wait and see if we break that resistance. If we break that, I think we're going to come up to at least a little bit further and then see where we're at. But I'm still long.
Still long.
But on that, where Donnie placed his trade with that slider, it's so easy to just bump your price up. Try not to chase it too much. You'll end up chasing it to the top.
Yeah, if you saw me with that slider moving it down, if I saw the price going up and you thought, oh shit, I'm going to miss it, so you start moving it up, and then all of a sudden the price wicks back down and buys your bags and then goes lower, you've just pretty much stuffed up. You should have just sat there and waited for the market to come to you.
And if you miss it, get the next one.
Yeah, that's it. We're trading this is on the 15-minute candles at the moment. So you're seeing a lot of price action, but we're talking 15-minute candles. So this isn't really that long. If you miss something, if you noticed, oh, I missed the bottom, why would you buy it here? Let it go. Let it play out. It's going to hit resistance, and then it's probably going to come down. So then you've got an opportunity to short it. You don't have to be in a trade all the time. I've sat here at nights with Brad and the boys, and they might trade 3 or 4 times, and I'm still sitting on the sidelines just waiting for a good opportunity to get in. You don't have to be in a trade. Yeah, don't FOMO.
Yeah, you don't trade, you don't lose.
Yeah, that's it.
On your position, just don't worry about it. Just wait, because the benefit about BitMEX is at the end of the day is that you might miss one opportunity now, but then tomorrow something else will pop up. So BitMEX is full of opportunity.
There is I'm just jumped onto the 5-minute channels candles here, just to give you a rough indication of opportunities. I'll just draw a simple channel, something like that. This is a bit obscure, this channel, but it gives you a rough idea. I'll move that up a bit just to hit another one of how many opportunities you have to trade this channel. That's, of course, this is if you get it right every time, which, let's face it, no one's going to get it right every time. But to give you an idea of this time frame here, what's that from 8 o'clock till 8 o'clock. So that's 12 hours that time there. You've had an opportunity to go long 1, short 2, long 3, 4, 5, 6, 7, 8, 9. You've had 9 opportunities to trade in 8 hours. These swings are anywhere from 0.6% to 0.3, 0.4%. It's not a very big channel, but if you understand your leverage, even if you're just on 10 times, that's still 3.9%. That's still 6.5%. When you start moving up into 50 times, you're talking like 30% swings, and you can do that 8 times a day. There's plenty of opportunities to trade on BitMEX. You don't have to go, oh shit, I missed this one, I'll quickly chase it. Why don't you just wait? Chances are it's probably going to come back down again, so you can catch it there.
Hey, Don, if you switch back to that 15-minute chart, Bitcoin's just pushing up against that resistance.
Yep. I haven't charted today, so I've got nothing to really look at. But just using some simple stuff here, we've got resistance. We've got a decent trend that's been happening over the last couple of days, and we're pulling up into the top of a wedge. So what Brad was saying, he was looking for a breakout. So he's probably waiting for confirmation to pop out of this channel, retest, and then probably go long there. So you would be waiting here. There's an opportunity to short. So I'd probably get ready to short. But I would be waiting to see if we're going to break out first. Because if we do break out, you're going to want to change that to a long, quick, smart. So best to just wait and see what happens. So we'll give that a second to play out first. You can still trade on the 4 hours, then the 1 hour, half an hour chart. It's just a matter of preference. I normally, if I'm looking for a long-term trade, you might trade on the 4 hours or even the 1 day. But when you're scalping those 5-minute channels, then obviously you want to really zoom in and see what's going on. But even on the 4 hour chart, there's still been plenty of opportunities to trade this channel that we've been in. But in saying that, if you're in these trades, these are 4 hour candles. So every second candle, you're going to be paying a funding rate. So it's not ideal to sit in a trade for too long because you're going to end up paying a lot of fees.
BitMEX also has a test net too. It's not as consistent as what it is in live trading because there's less volume on the actual test net itself. But if you don't want to use any physical money, or perhaps you want to use a small amount of money here while you are trading live, but testnet's an interesting way to familiarize yourself at least with the interface. And once you do start getting into this, some of the late night trading sessions that the boys have, you think there was a party going on because everyone's hollering and cheering, and there really is a huge level of excitement when you're trading on those very small time frames. For a lot of people who have lost their passion for trading or interest, it really can bring that back because it is so exciting.
Oh yeah, just jump onto me, Don and Brad, mate. It's like watching the horse races. We tee up pretty hard.
Yeah, it is pretty exciting.
Good fun.
Because we are seeing a lot of price action, even though these are like this looks like a really big candle, and to be honest, that was a big candle. But on the 5-minute time frames, they look huge. You think it's mooning, but it's really only gone up like $20. But that percentage increase could have meant 30, 40, 50, 60, 70% for us. So that's why we're all excited and and loving it. I might just chuck a short on now anyway because it looks like it's running out of steam to try and bust through.
Yeah, I've got a short set at 65.29.
Actually, I think my short would have hit if I had hit it at 65.30.
Yeah.
It looks like it's already busting down. So what I'll do anyway, I'll put a short in for 65.30, which will put it into the book for me. All right, and then I'll just move it down. It's easier to do that than it is to try and accurately key in your price because you'll find sometimes if you're trying to just get that 50, because that goes in 50-cent increments, if you're trying to get that 50 cents above, you'll find that by the time you've typed in the price and gone to press go, it would have hit your price anyway and you've just lost, you've just become a market taker. So chuck your price in a little bit above and then you can always just move it down like that. Again, I'm essentially doing what I just said not to do by chasing a trade, but I just wanted to enter a trade for you guys and show you what it's like once you enter a trade.
Yeah, just, guys, another thing to just keep in mind is that you might see a massive sell order. You might think, it's the end of the world, it's going to go down. But it doesn't work like that. The order books, they mix up, they change so fast. It might be going down 1 second and boom, you'll see a bounce back up. So if you do miss the trade, try to avoid using that market button as much as you seriously can. Yeah, that market button is dangerous. I've done it so many times. I've entered trades and instantly I'm a couple of percent down, and then, if you are on the losing side, it can be pretty bad.
Yep. So we're seeing here, price is coming up. We're trying to make it hit my order here. So my order should be next in the book. So just give it a second and hopefully she pops up. If it goes, just about ready to hit. So it's just eating up the rest of the orders in the book before mine hits. And it may go up and burst through where I bought. Okay, so order filled. So down here you get the confirmation just to say that your order's filled. Okay, we can close that. No, I'm not too worried about how this trade plays out. We just put $15 or so on just to show you how it all works. So not too stressed. It does give you a real-time profit and loss calculator here, so you can see where your current position is. So we'll run through the position tab here. So obviously the first symbol is the market you're in, which is XBT USD or BTC USD. if I opened up another trade now on Cardano to go long or short or whatever, it'd simply pop up here on underneath that one as ADA BTC USD. Size is the amount of contracts I've bought. So I've bought 100 contracts to go short. Actually, I will just touch on this as it was one of the questions on the last video we did. Some people were asking what's the difference between a short and a long. A short is you're buying a contract because you believe the price is going to go down. Basically, it's more or less betting the way we're doing it. We're sort of gambling. We're betting against a house because we believe it's going to go down. And we're betting using our XBT, which is essentially like our chips at the casino. A long is simply betting that the price is going to go up. Because we're in a perpetual contract, we can close it whenever we want. So yeah, that's pretty much a difference between a short and a long. Moving on here, size of contracts. We've got 100 contracts or 100 USD worth of contracts. That's the value of the contracts is 0.0153 XBT or BTC. It shows me my entry price. So that's what price I entered at, and you can see my entry prices in the book here in the chart as well. So it's always a good visual representation of knowing those lines of support and resistance, or knowing where you entered, so you know where you can get out at a safe spot, or wait for price to come back down if you wanted to exit the trade. If you average in, so for example, if I saw the price going up and I wanted to buy more contracts here, you can simply buy, you can type in whatever you want, type in the price, press sell short, you'll buy more contracts at that price. So you'll end up saying 200 contracts here, and you'll notice your entry price will change because you've just fixed your dollar cost average. So if I bought 100 contracts here and 100 contracts here, my entry price would then move up to about here, basically dead in the middle. So that fixed your dollar cost average technically gives you a better position, but you're now risking more money. Now, mark price is sort of a lagging price, which is based off GDAX, GDAX and Bitfenix. I can't remember now. I think it is.
What's this for?
The mark price. I believe it's an average between GDAX and Bitfenix charts.
Yeah, basically it prevents people from getting like liquidated on like a flash pump or dump.
Yep.
So the mark price won't fluctuate like the actual candles do.
Yeah, you'll notice the price difference as well. So 6532 is our mark price, but the current price on XBT is 6527. So there's a $3 or $4 difference there. That's because this is a lagging price between two different exchanges, whereas this is the current price on this exchange right now. The reason they do that, as Brad just said, it avoids flash pumps and dumps. So if a whale was to come in now and do a dirty move and just short it with a couple of $1 million and the price licks down and bounces back up, you won't get liquidated because this price won't change for a couple of seconds or so. It gives you a chance to exit. So if you market sell, you'll be market selling at that price, not the next book, not the next price in the order book. So yeah, it's a bit of call it a safety margin, I guess. That's basically what that is. Lick price, that's my liquidation price, which you see here before you place the order. So if I was really paying attention, I would then go and put just a basic line on my liquidation price so I know where price can't go before I get liquidated. And that gives me an idea of where I want to place my stop loss if I don't want to, ideally you don't want to get liquidated. So you want to be able to make sure you can get out of that trade. If it's turning bad, you want to be able to get out before you get liquidated. In this case, for $15, it's not really worth worrying about. So margin here, again, this just displays your cost, which is the amount of money you're risking, which is 0.0015 BTC. This is also the amount of money you're actually making profit on. So when it says 10 times, if the price moves 1%, I'm going to make 10% on this price here. I'm not going to make 10% on my total value. It's only going to be the price I'm risking, or essentially I'm making 1% on this value. So that's why you borrow money. You borrow money to make your order bigger. So when it moves 1%, you're making 1% profit on a larger value, even though you're only risking a smaller amount. You can add and reduce your margin on the fly simply by clicking it, and then you can add or reduce margin as you go. So I'm just going to add 0.001 XBT to my margin. And what this will do, you'll see how much I'm currently risking. By adding margin, I'll essentially be giving myself a bigger buffer. Now, you'll notice my liquidation price may not have changed much because it was such a small amount, but essentially, if you noticed that the price was coming near your liquidation price and you didn't want to get liquidated, you can add margin, which would essentially move your liquidation price up slightly higher. But you have to take note, you're also risking losing more money. So if the price action kept following, you increasing your margin, and then you ended up getting liquidated, you're going to end up losing more money than you originally put in. So that's something to pay attention to. It can be a handy tool, but it can also get you in trouble if you're not using it to the right reasons. Unrealized profit and loss. The display right now is based on the mark price. So the mark price is still 6533. My entry price was 65228. So it technically says I'm losing money right now. Even though my short is somewhat successful, because it's based off the mark price, it says I'm actually minus 0.85%. If you hover your mouse over it, it'll actually tell you what if I was to exit at the current price on XBT, well, then I'd actually be 0.2% in profit. Your realized profit and loss is basically your 24-hour turnover on your multiple trades. So if I was to, say, close this trade in a 10% profit and then do another one and make 20% profit and then another one and make 30% profit, if all that added up to half a Bitcoin, then it would say half a Bitcoin here. And then if I lost, that would come off here as well. So that's just I guess you could use it as a quick visual representation of your daily activity and how well you're going today. So if you've had a shit day, that'll probably say you're down. If you've had a really good day, that'll say you're up. Now, to close a position, you can simply type a price in here that you want to exit, and you can press close, and that'll put your order into the book on where you want to get out of your order. If you, say for instance right now, you think, oh shit, I've made a mistake, price is going to go up, I'm going to lose my money, you can market sell. Whack market, and you'll sell your bags at market price. Right now, market price is higher than the current price, so I'd actually lose even more money than I would if I just sold at the next available order. So, and also as a market close, you'll also be paying a higher fee. So market sell is something you would do as a bit more of a panic button rather than just a habit, because you're going to end up losing a lot more money than making money. Right. I'll set up an order to, actually there's one more other way you can close a position. So rather than just typing in a price, so let's just type in a price to begin with anyway to show you. I'll just put in 6522. 6522. Press close. So that means I'm going to be technically buying 100 contracts long. Now you'll notice, okay, so that's put my order into the book here. So again, as I showed you before, you can move your order around. So if price was coming down and it looks good and it looks like it's probably going to come down here and make some good profit, you can simply grab your box, drag it down, it'll re-amend your order, and now my sell price is now lower, 6516. You can do the same thing if you don't think it's going to hit. If it looks like it's probably going to hit this support here, you can simply grab it up, sit it just above the support to make sure you actually get a hit, and then bam, you'll get a hit. So that's one way you can set a sell order. That's how I did it just down here with close. If you want to cancel that because you think, no, I don't like that, simply just cancel it, and that will disappear. Now you're back in the trade still, and then you can change your price and do whatever you want there if you want. Alternatively, you can simply buy the same amount of contracts long, and that will technically cancel out your short contracts. So same deal, if I wanted to exit the trade around here somewhere, 6521, I would simply press 6521, buy long, and that would essentially put my order in the book down here. So it's the same way you can pick it up and drag it and do whatever you want with it.
And a question for you, Brad. For those people who don't know, Brad's been trading for a little while, but he's the silent assassin. He sits here in the background, doesn't say a great much, but Brad has done quite well with BitMEX and is on it, quite regularly. But Brad, what do you see in terms of the way the volume changes maybe throughout the week or throughout times of the day? You trade quite late at night, don't you? How do you think that differs by perhaps trading in the middle of the day here, Melbourne time?
Yeah, definitely. I found that I do most of my best trading in the early morning. There's times where me, Donnie, and Seds and a lot of the boys will stay up till 3, 4 a.m. so we can trade with foreign markets. And the price action's different. So what I suggest is testing what works for you. Don't try and trade off someone else's strategy. Find your own what works for you. When do you do your best trades? Try and do a little bit of research, and you'll notice little things about when you're trading. Don't trade when you're angry. And don't trade with emotion and stuff like that. So
don't trade if you're tired and you can't focus.
You want to identify your key times that you're doing your best trades and stick to them.
Brad's is about 4 o'clock in the morning.
Yeah, and my hardest thing, I think that I'm actually battling myself at the moment is locking your profits. Like Donnie tells me every day, lock in your profits, and then I don't listen and I continue to trade, and that's when I move out of my my trade zone or whatever you want to call it, and I start making dumb moves and losing some of these profits, and it just doesn't work. So find what works for you, find a good strategy, and document them all, and then move forward and close out. Stop doing things that aren't working.
Yeah.
Just in regards to those night sessions, sometimes it is good to trade at night because the volume is a lot more intense than what it would be other times of the day due to the American markets.
Yeah,
and
weekends are pretty flat. There's not much volume during the weekend.
Yeah, weekends
obviously everyone's out, riding their jet skis and whatnot. So
thing is, but if you are very tired, probably stay away from BitMEX because it is very dangerous. And me, for one, I can say from previous experience that when I am tired, I do make a lot of shit moves.
Focusing is definitely important. You need to pay attention.
Yeah, you need to pay attention. You need to be in the right mindset to trade. If you're not in the right mindset, I highly recommend don't even log into BitMEX.
And it's don't try and chase those losses. If you're chasing a loss, you're just going to get further, deeper and deeper. Stop, take a break, call
it quits for the day and hit it up tomorrow.
That's it. Exactly right.
Yeah. Well said, guys. Great points.
Yeah, sleep is very important. Trading. You need to be on the ball.
Rightio. So I'm just trying to make this trade hit so we can swap it over, but she's been pretty stubborn. So this is what we mean by low volume and low price action. It's really hard to try and trade or exit a trade sometimes when price just isn't moving around. There's dead times in the day when price doesn't move, and then there's, as Brad was saying, we found that the early mornings is when we get the most price action. Whether it's when the Americans wake up and hit the computers, we don't know. But
yeah, we found it's between 1 a.m. and let's say 4 a.m. we see a lot of price action. So I'm not saying that's going to be the best for you and to stay up till 4 a.m. But try different things and see what works.
I personally won't be up. I'll definitely be going to sleep, waking up in the morning, and finding a new opportunity when I'm nice and fresh.
Mm-hmm. But then we get Snapchats at 1 a.m. in the morning, and Matthew's decided to go to Crown and clean them out.
Yeah, Baccarat and BitMEX are two different.
Hey, just for everyone that's on the call as well, how long have you guys been trading? Just pop it into the chat box. Let's get a bit of an idea of how familiar everyone is with BitMEX.
Now, I mentioned a few ways to exit a trade now. So you've got, there we go. We just hit, sweet. Now, I didn't stress too much about the profit I made then. It was more so just to close to show you how it works. But did you guys notice how we struggled to move this candle around we're on the 5-minute candle. So for 5 minutes, this thing just bounced around here and would not move. As soon as this candle opened, bam, we dropped that much. It looks like a big candle, but that's barely even a movement, to be honest. Looking at these 5 minutes, that's 0.05%. So it's bugger all movement, really. But it just shows you how quickly those candles can change when you're looking on these 5-minute charts. So don't freak out too much. But
also just to touch on that, if you think that you just want to skip ahead and just dive right in and go 100x, that would have been a 5% movement that you may have gained or worse off lost. So that's why we're
Yeah.
saying be careful with your leverage. A little movement like that happened in a click of a fingers was a 5% movement at 100x.
Yeah.
So it's quite dangerous.
Yeah. So I've showed you a few ways to exit there by simply typing in a price down here, pressing close. You can market sell, which I don't recommend. That's more of a panic button when things are really getting bad. Alternatively, you can buy the same amount longs. There is one other thing you can do. You can actually, if you wanted to flip your trade because you believe you made the wrong decision, you think, oh, okay, I went short, but I actually think I should have gone long. Or what you can do is actually double up your bags. This does introduce another level of risk because you most likely will be selling your contracts at a loss and then buying new contracts and hoping that plays off. So that would have actually been a half decent short if I had stayed in the trade, because I think I put my original sell order down here. But I'll look to place a long.
I'm still in 25x.
I'll look to place a long now at 651. Actually, probably should be going more so down here. 6514, but I kind of want it to hit, so we'll just chuck something in anyway. 6514, same amount of contracts, basically exact same setting as what I had before, 10 times, risking the same amount of money, and I'm going to go long. So we're going to buy that contract. That's put my order in the book. You see it pop up in here. So now we know we're good to go. Now we can just wait for that candle to come down, maybe the next candle to come down, and hopefully we get a hit. It's much the same thing as going short. You've got the exact same details here. It's all just reversed in terms of cancelling. You're going to be to get out in profit, you're going to be selling at a higher price than that you bought in at. Now, as I mentioned, by doubling up your bags, why that's more risky. Say, for example, I've decided to go long here, and we come down and touch it, and it starts to go up, and then it starts to go down. You can cancel your trade. You can close it and get out. You can market sell. You can buy short contracts or whatever. But if you want to stay in the trade and take advantage of the short, you can actually place an order for 200 bags short. All right. So if you place an order here at 200 short, what that's going to do, as it comes down, 100 contracts are going to cancel out your long, and the other 100 contracts are going to purchase 100 contracts short. So essentially, you're canceling your 100 contracts long and buying 100 contracts to go short, and now you're still in that same trade, but you're going the opposite way. So it's a good way to flip your bags if you think you are going to nail it. But like I said, the risk is you're potentially going to be selling your longs at a loss and then jumping straight into a short. And if it's a fake out and it starts going up, well, then you might get liquidated, or you might end up selling your shorts at a minus 20%. So you basically just got double fucked. So pay attention to that. It is a risky move. I've done it before and it paid off, but I don't recommend doing it all the time. It's more so something that I do on these channels when I'm confident that the price is going to bounce down, because you do normally get these consolidations after a big move, but they don't last forever. So you get a big push like that, price comes back down and consolidates for a while. It has to make a decision. So you wouldn't go doing it right now, because we could be at decision time any moment now. Decision time could be this next candle. It could be the next 5 candles. Once that time comes, we're either going to break up or down. So you want to be in the right trade for then. So you wouldn't be doing a bag flip here, but you would have probably done it back. Oh, sorry. You probably would have done it back here somewhere, because you've got another day or so of consolidation before we get any serious movements. So what you would do, say you'd put 100 contracts to go long here, and as price come up here, I would set a double bag of shorts here. So when the price comes up, it'd sell my longs and instantly buy shorts, and then I'd be in the trade here as well. Same deal. Once you found this channel, you could buy a double amount of bags long. So you'd be going long, you'd be selling your bags to go short, you'd be selling your bags to go long, and vice versa. That way you can literally be in a trade without having to close your order and then buy another order. It'll instantly do it straight away. So yeah, that can sort of be done on the fly. Price didn't come down, bugger. Like I said, there is risk involved in that. If say, for example, if I had done that to go short, I'd sold my long and then the price broke out, well, then I'm going to end up losing on my short. So that's where the risk comes in. You're putting faith on that resistance paying off and price bouncing off it. And same thing if you do it here, you're putting faith in the fact that support's going to hold and price is going to bounce off. So it is risky, but it can pay off. In terms of staying in trades for a long period of time, so we're trading the 5-minute channels here. We're scalping small 0.5% channels. Myself, I don't particularly go over 25 times. I'm comfortable with that. I'm happy with my liquidation prices on 25 times. I'm happy with the amount of money I risk. Seds and Brad will generally go a lot higher, 50, 100 times. And sometimes it pays off for them and they make really good gains, but they get liquidated a lot more. I've never been liquidated before. That they can cop big losses because they've taken that risk. I tend to move more into the lower time frames. 25 times is enough for me. Sticking in a trade for a longer period of time, like I said, we're trading these small time frames, so high leverage for us. It's fine because these 0.5% channel could mean 10, 20, 30, 40, 100%, 500%, just from these little channels from trading. But if you're looking to buy a trade and sit on it for a few days, you wouldn't be looking on these 5-minute candles and trying to trade the channels. You would be looking for overall support. So that's when you'd be looking back at the 4-hour or the 1-hour charts even, and finding those levels of support and resistance. Right now, we're sort of headbutting resistance. So if you're happy to place a trade and sit in it for a few days and see how it played off, by all means, you could chuck a short on, but you'd be wanting to put it on a lower leverage short because anything can happen in a day or in 5 minutes or 20 minutes. We've seen this candle happen in like 15 minutes. You would have been looking here thinking, oh, look, we're pretty close to our resistance here, so I might place a short on. And then you would have gone to work and not worried about it, not realizing in 15 minutes that happened. It would have liquidated because your liquidation price might have been somewhere down here, might have been up here. You would have lost your whole money without even noticing. So leverage trading is something you don't want to just place a trade and walk away or go to work or whatever, unless you're going to give yourself plenty of room on your leverage. So you're trading the smaller 3-5 times. If you're looking to chuck a leverage trade on and leave it on for a few days, stick to the lower time frames, the lower percentage. Don't trade up here. This is for scalping. Anything else you want to add, Brad, or we can jump into some questions? Because I think that's about it, really.
Yeah, I think we're ready for some questions.
Yep. Ads, we got any questions, bro?
There is not a whole lot, but I will start from the top.
If anyone's got any questions, now's the time to throw them in the chat. And
that's right.
We'll see.
Throw them in the chat, and now, we'll jump into it.
All right, Don. So I'll give you this one, mate. This is a pretty basic one, but Nick has asked, how do you determine support and resistance? What are some easy ways for some of those newer guys, Don?
Yep. All right. So I do apologise. I guess we sort of assumed that most people would have some sort of idea on TA. If you haven't, we will be going into that later. We'll, probably myself, Brad and Ty would look at doing some...
You there, Don? Just real quick, guys, just general announcement. If you are looking at trading BitMEX, I highly recommend that you learn to do TA before even registering.
100%.
It is 100% necessary.
Yeah. If you don't know TA, you probably shouldn't even be here right now. You should be learning.
Doing technical analysis. I highly recommend that you take a course to learn. There's plenty of courses available online. Also, I'm sure that Donnie, Ty, they have some informational guides available. Just thought I'd add that to let you guys know.
Yeah, we'll be looking at doing some. I think what we're going to plan on doing is doing some real basic introduction to TA.
I think
basic lessons just to let you then go on and learn the more advanced stuff on your own at your own time. But I definitely think it's worth. Everyone needs to learn the basics. So getting back to that question, how do I determine? Sorry.
Yeah, sorry, and also on that, Don, two guys on the website, you can go to the blog page. We've got stuff about candlestick basics, fibs, MACD indicators, Ichimoku, Elliott wave theory. You can jump on our website and read some of those if you want some more advanced and even some simple techniques as well.
By all means, go and have a read, but I think the lessons that we're going to do will probably bring a lot more value. Learning with someone explaining it to you is a lot easier than trying to read it, I believe.
Absolutely.
Let's get to the basics, which I believe is where we would probably start, is the support and resistance.
Yeah.
So to determine these levels, obviously, I guess I should explain what support and resistance is. So support is a level of price where price can come down and hold. So price is going to come down, sort of say, for example, here, it's come down and it's held here and bounced off. Come down, held here and bounced off. Come down, hold and bounced off. So this is a level of support. We know 6.2, this is just roughly, it's probably more like here or so. We know this price of 6.254 is a very strong level of support. We know that it's going to come here. There's a good chance it's going to bounce off. Resistance is basically the opposite. We're looking for those levels where prices come up and bounce down. Come up, bounce down. Come up, bounce down. Come up, bounce down. The more times it hits, generally the stronger it is, but there's only so many times support and resistance can hit before we get a breakout. We're looking for candle touches.
It's like chipping at a wall, and eventually it's going to break through it.
That's right. We're looking at the top of wicks. So you can see I've got another line here, which is sort of at the top of these 2 wicks here. So that's a level of support. You can also, if I zoom in, so you've got a wick here. So you've got a touch. You've got a touch here, and you've got a touch here on the way down. So that showed that it was a level of support, and 2 levels. 2 levels of resistance here. So we know that that's a key level of resistance, 6640. So that's where we would be paying a lot of attention when price starts to get up there, because we'd be looking for a price to break out, which would indicate that the price will probably continue. If it bounces off it and goes down, well, then you'd be probably looking at taking a short position because there's a good chance it's going to come back down to a level of support. And then same thing here, candle closes. You got a touch here, touch here, touch here, couple of touches here, another touch here. So that's another key level of resistance. Basically, you're just looking for those price points where we've had multiple touches. If you go the 1 hour, it might show a bit more candle closing action.
And to take it a little bit further for Nick as well, Don, wicks or real bodies, why are you choosing the wicks over a real body? Okay. And sort of maybe what's the difference?
So I'm not sure if everyone understands what a candlestick is, but a candlestick, so for example, now we're on the 1 hour time frame. Each candle represents 1 hour of price movement. So it's telling a story of what the price did within that time frame. So in this hour, so if the candle is red, that means the candle opened at a specific price and closed at a lower price. If the candle is green, that means it opened at a specific price but closed at a higher price. So this candle here tells me a story that when this candle opened, the price started at 6406. It got down as low, so the wick got down as low as 6215. And price went up as high as 6411, but then it came back down and closed at 6250. That's a bearish candle. That's a big bearish candle. But it bounced off support, so we got a couple of green candles afterwards. This, for example, a dragonfly, this shows more of an indecision in the market. So we've got a very, very small body of the candle. So we opened here and closed here, which means if you have come and look at this chart right now, at the open of this candle, you would have seen 6329. And you've gone away for an hour, come back an hour, and you would have seen the price only a couple of dollars extra. You would have gone, wow, there's not a lot of movement in the market. But it did actually come right down, and it did actually go up here, but it closed here, which means there's indecision in the market. No one really knows which way it's going yet. Then we followed it with a bullish candle with a lot of movement. So the wicks indicate where price has been within that time frame, and the body indicates where it opened and closed. So this, for example, that got down as low as that price, it got up as high as that price, but it opened here and it closed here. So to draw that as an example, I'll just get my pen out. This candle here represents something like this. That's technically what this candle did. It opened at this price, it got up as high as this price, it came down as low as this price, but then it closed at this price. So that candle there tells me this story. That's an hour time frame. That is an hour. In that hour, that's what happened. Draw another one here. Say, for example, this hammer here. This tells me the story that price opened here, it went down, and then it went up, and then closed about here somewhere. So that's what this candle tells me. In that hour period, that's what the price did. It started here, it went all the way down, it got eaten up, and it closed above. So that's a bullish candle. That means the bears tried to push the price down. So there was a lot of selling pressure, but the buying pressure overcome it and closed above. So that's the longer that wick, technically the stronger the bullish sentiment. Did that sort of explain that guy's question about support and resistance and basic candle?
Yep. Thanks very much for the question, Nick.
Cool. Yeah. So basically, when you say how am I determining it, I'm looking for multiple touches on the candles, on the closes, on multiple time frames. If I'm trading the 5-minute time frames, well, then I'm looking for multiple touches on the 5 minutes. So we'll zoom in on that. So
just to touch on what you mean by multiple touches is where price has been previously. Tells a story on where price may return to or will return to retest.
Yeah.
And this determines support and resistance. Once you break resistance, it then turns into support.
That's right.
And vice versa. So if you break support, it then turns into resistance.
So right now, looking in this 5-minute channel, because we zoomed in and now we can see more price action within this channel. We've seen multiple touches here, close to a touch here. We've seen multiple touches here on these wicks here. You can see we've had a couple of touches. So right now, this is a level of resistance. But if I'm just getting my pen back out. If we actually get a breakout here, and then we come back and retest it and then bounce off it, now this line here now becomes support. It's not resistance anymore, it's support, because it's now holding price and rejecting it going lower, which means the bears are taking over the market. Any more questions?
Yeah, Don, sorry, just to maybe answer that, some of the people have just asked the wicks over the bodies. Is it a personal preference, or why do you choose the wick?
I kind of end up doing multiple. So I'll use, as you can see here, I've used a wick here. I've actually gone through a body here because I believe this is a fake out. This was just a quick push and a quick bounce back up. So I'm not including that. We're seeing multiple touches on bodies here. So normally you'd go by something that's had more touches. So it doesn't always have to be wicks. It doesn't always have to be bodies. It could be a combination of both. More so what lines up better. So for example here, if I used only wicks, then I would put this line here. I'll zoom in a bit so you can see the fact that I'm actually going through some bodies here. Whereas if I use bodies as a preference, then I would put the price up a bit, but now those wicks aren't touching. All right. So I would personally come back down to those wicks because now I've got 2 touches on the wicks and 2 touches on the bodies. I prefer to use that. So yeah, it's a combination of both. Some people like to use wicks. Some people like to use bodies. It's just a generalization. Most people are looking at roughly the same thing. So whether I had this line, this trend line here touching only the wicks or only the bodies, it's not really going to affect my decision by that much, really.
Yeah, that's right. You know, and when you're looking at bodies and candles, you know, it does give you a lot more entries, I suppose, than using just strictly the candle bodies if you're including the wicks as well. But it can come at a slightly increased risk.
I personally think the wicks are important because you need to know where price was pushed to.
Yes, that's the reasoning that I use wicks is that's where price has been.
Yeah.
So
if price has been here. This was a solid green candle all the way up to here.
Yeah.
It closed lower, but so that's still relevant. There's no point in only using bodies. If you only use bodies, you might be back down here somewhere. Well, we've had 2 breakouts. So that's why I like to use wicks.
And that's right. So you can see there where Donnie's just changed his resistance, that we'd had those 2 breakouts. If you were following some TA that you learn in any course around, support and resistance, if you wait for confirmation. So that next candle opened bullish. That's an indicator to enter. You would have entered there. It would have come up to around the 6.5. Yeah, up the top.
Well, a perfect move or a textbook move. If you saw this breakout, if you were using this as your resistance line and you saw this breakout, like Brad said, you probably would have put an order back down here waiting for the retest.
That's right.
When you get a breakout, you always have a retest to test to see if this is now support. So if you would have scalped an order here, price would have come down, filled your bag, and you would have been expecting it to bounce off to the moon. Instead, it just broke through and turned to shit. and you would have probably sold the bottom out of fear of it kept going. So that's why you got to wait for confirmation. You want to see it hold. So you had a breakout, it's come and retested, and then it's broken through, and then you would have gone, shit, lucky I didn't place that order. But if it had started to bounce off, then you would have wanted to set your order in. I prefer to go to Wix because it shows where price has been and been rejected. So price has come up here and said no. It's come up here again and said no. There's a good chance it could come up here again and say no. So if I was looking to short, I'd be looking to short right up here at the top in case we get a nice big green candle up to here. But again, if you were scalping this and I went and jumped into a short right now, you'd be putting faith in the fact that it's going to get rejected again for the third time. And like Sedia said before, there's only so many times a price can get rejected before it breaks through, like chiseling at a wall. Those barriers don't hold forever, which is sort of why we're a little bit weary at the moment. If we jump back into the 4-hour chart, you can see this current channel that we've been bouncing around in for the last couple of weeks now. You look at how many times we've had a couple of breakdowns and we've had a couple of break ups. If you have a look here, we've got 1 touch, technically 2 touches, 3 touches, 4 touches, 5, 6, 7, 8, 9, 10, 11. We've had 11 touches on this support level at around 6.2 now, something like that. There's only so many more times that we could hit 6.2 and bounce off. Eventually 6.2 will fail. The only reason price is bouncing off is because someone has big orders here. Someone's got big enough orders here for price to come down and fill and bounce off. It's only a matter of time until all those orders are gone, and then eventually we're going to go down. It's the same with going up. I'll move that one up here somewhere. If you always, as we always like to say, look left. So as price starts to move and you're trying to figure out, where's the next line of resistance, look left, right? So the other day when we got this big green candle and it bounced off down here, if you look left, well, that's a pretty clear indication of there's a resistance there. Keep looking left. Yeah, we've come pretty close here. Keep looking left. Keep looking left. You'll find multiple touches again. History repeats itself. All right, you always get those multiple touches. That's why you always zoom out and look left, because you're not just trading what you're seeing in the next 5 seconds. You're trading to see what's happened in the last couple of months, because those lines can still determine strong levels of support and resistance. And like I was saying, there's only so many times we can hit resistance before that breaks out. So we might come up this channel, hit here, get rejected again. Come down here, get rejected. Eventually, someone's going to break. We're either going to break down or we're going to break up. So that's what we're waiting for. We're waiting for confirmation that we're going to go in either direction. Right now, we're sort of moving in a bit of a bear flag, to be honest, something like that. It's not that accurate, but so there's a good chance that we may not break through again, and we may actually break through this. That could be a bit scary. Come back down here, and then we're going low. If we create a lower low, so right now we're actually on a higher low. So over the last couple of months, that was sort of our lowest price. This last downtrend finished higher than the last one, so that's technically it's a bullish signal, or it's not a very strong bullish signal right now because we're sort of stuck in a bit of a bear flag. But if we come down and create a lower low, and we end up down here somewhere, well, then it's not looking good. We're going down further. Anything else, Ty or Adam?
Yeah, maybe we could get Brad to answer this one, because he answered it pretty well for Nick. Nick again asked, thank you, Nick. Would you place a short below the support in case it breaks out below, Brad?
No, I would not. Always wait for confirmation. So you don't want to just go ahead and place an order below support just in case. As we spoke about before with the fake outs. If you get caught in a fake out, just right there. So you can see there, if you were to set on that trend line there, Donnie, we've got that fake out.
Oh, down here?
Yeah, right there. So if, let's say you just put an order just below, you would have filled your bags. It would have come down. You would have went, yes, you beauty.
Is he asking, would you place a short order here?
Yeah, just below support. I wouldn't. So you could see here it broke out, closed, and then the next candle in the next 5 minutes, we closed it in.
Pushes back in.
And you can see now that from this point here, we've only gone up. So
we've respected this trend pretty well.
That's right. So what I mean by confirmation, is this candle closed outside of trend. That's a a good sign for going short. Wait for the next candle to close. That'll give us confirmation of breakout. And then the next candle after that is my confirmation to say, like, we're either out or we're coming back in.
Yeah.
Next book is usually 3 candles in that.
That's right. 3 candles.
Yeah. So you've got the breakout, the retest, and then you've got the direction. So
that's right.
That'd be a breakout, and then we would have had a retest. If that had a hold, and then we would have gone short again, then you probably would have looked at going short.
Correct. Yes.
But if it bounces back in, well, the retest has failed, so that was a fake out.
Yeah. So to answer your question, I just to place an order just below support to try and catch it is more than likely to end badly, and always wait for confirmation. Confirmation
actually
is going to save you.
On that as well, to place an order below to go short would actually put you straight into a short because, if you were to place a short position. Oh no, sorry, it wouldn't. I was thinking.
It'd fill your bag. It'd bounce back up, and then you're in the negative for the next. What are we on the 5 minute for the next hour or 2 hours? You've been sitting waiting for it to come down, and it's just gone up. And
if this breaks out from here, well, then say goodnight. You'll probably get liquidated, or you'll end up selling your bags at minus 40%.
If you're in a high leverage, what price action's done since these 2 candles is it looks like liquidation. Otherwise, you've lost, like Donnie said, 40% of your bags, and you've FOMO'd out of it.
I will warn you guys something else about BitMEX. It is very heavily manipulated. I'll scroll back and try and find some manipulation for you so you understand.
It's just the other day, there's about 50 of them.
Yeah. This one here. So we all knew about the
BitMEX maintenance.
Yeah, the BitMEX maintenance. So for those who don't know, we were warned back a couple of days ago.
It was the 8th of August.
Was it? There you go. That BitMEX was going to be closed for half an hour for maintenance, for scheduled maintenance. So everyone knew what was going on. We knew that BitMEX would be closed and we wouldn't be able to open or close a trade during that time. As you can see, there's 4 dojis there where price didn't move. In that time when when BitMEX closed, we had a massive green candle.
Huge. And like if you have a look how big it was with your price range. It was a big move.
That was a 10% spike
in 5 minutes.
Yeah,
so that's huge.
I don't think it'll show up on the 5 minute because it's too big. But can you imagine if you were in a short here before BitMEX closed, and then we had this long, you would have lost all your money. And that's exactly what it was done for. Most people saw it coming. If I go to
a lot didn't. Remember that
a lot didn't.
That image I sent to the group, there was probably nearly $100 million that was liquidated.
Yeah, there was big liquidation. For those in the know who pay attention to a little bit more than just the chart that they're looking at the time, there was indication of something happening and possibly a squeeze. The shorts are just rolling in, man. So this is Bitfenix shorts chart. So this is basically just, as we normally see, it's a chart, but it's the indication of how many short contracts there are on Bitfenix. So you can see here, last time we get an all-time high on Bitfenix shorts. If I go to the daily, well, actually it was this one here, I believe. Was it that one? What's that? Yeah, 17th of July. No, 10th, 11th of July. Must be this one. No, this one. Where was it? Oh, it's 10th of April. What am I doing? That was here. Okay, so back here, you can see in April, there was a record amount of shorts. That means there was a record amount of people with short contracts in the Bitfenix books, meaning they were betting that price was going down, and that was increasing. There was so many people with short orders. Someone took advantage of them. Basically, a whale comes in and goes long and knows that everyone's going short, then they just liquidate everyone. And as you can see exactly what happened here on that day, bam, big green candle, liquidate everyone. Everyone who was in a short, because there was massive amounts of shorts, they got liquidated, lost all their money. That's ticked off a bullish trend, and we had a little run. Now we've seen the exact same thing happen here. Just the other day, we had shorts reaching. I think it was about here. Yeah, it would have been there. It's starting to tip onto the all-time high of shorts again, and then we had that planned BitMEX maintenance, which just shot up a 10% candle, which wrecked the whole heap of people's shorts, liquidated $100 million worth of people. Unfortunately, the shorts are there goes
that long I was talking about, Donnie.
I'll jump back in and have a look to show you guys how quickly things can move. So you saw how I had that resistance line drawn before. Right, so we've got a breakout now. Now let's just pay attention. You can see the price action that happens when you have a breakout. You saw how slow the candles were moving before. Now that we've had a breakout, look at the order book. It's going crazy, and you can see the longs piling up. Shorts still sort of counteract it, and they'll get bigger as well. But this is a fight now. So the bulls and the bears are fighting.
Yep.
And we want to see
2.5 minutes left on the 15, so there's going to be a bit like this for the next couple of minutes.
It's normally just before the close as well. So say if you're looking at a 4-hour candle or 1-hour candle, those last minute or so, you'll see the most price action, because that's the big players wanting to push a candle into a specific point to get the movement they want. They're the big players that make the market move. We're just a little fish, and we just go with them. So right now, what we're looking for, we've had a breakout. We're looking for confirmation. So we're not doing anything yet, because we don't know what's going to happen yet. We've had a breakout, but that doesn't mean anything just yet. So we want to see where the candle's going to close. So you can see right now, it's struggling. It's getting right down. So if you had a FOMO'd in here because you thought, oh shit, we're breaking out, jump in. You would have market bought here, paid a nice big fee, and now we've come back down. You would have been instantly in a loss, going, oh, I stuffed up. Then you'll market sell it and lose even more money, and then price could just bounce back up again. So you always have to wait.
Perfect example of using a resistance line right now.
Yeah.
Watching and waiting. So we've got another minute and a half, and we're well under resistance again.
Yep.
So we'd need that candle to close above resistance, and then we need to wait for another 2 candles to tell us where we're going.
Yep. So hopefully this can close out, and then we can show you the retest, because it normally retests. Another minute to go. So yeah, what was I saying before regarding the shorts?
Just on that one though, if we don't close above, that would be an indication for me to start looking for a short entry back down to trend line.
Yeah,
and
definitely.
that's basically all we do. We just follow these pennants up and down, and they're good swings.
That's what we call scalping. There's probably not much point scalping when you first start off. It's good to have a play around with. You can play with $10. You don't have to play with $500, $1,000. You can put a $10 order in. It doesn't matter. But just remember, if you're betting $10 and you're 3 times and you do a 0.5% move, you're not really going to make a lot of money. So don't think you're going to become rich by trading these channels. It's riskier.
And Don, a question we had on Tuesday that I think was quite a good question. They're sort of talking about what type of percentage of your portfolio you're trading with at any one time.
I don't keep a lot of money on BitMEX. I've only got about $600 or so on here at the moment. My orders they vary depending on how confident I am, what I can see, and if I'm in the mood or in the zone. I'll place a trade anywhere from a couple $100, $100, $300. I don't risk heaps of money when I play. More so with BitMEX in alt trading, obviously it's a bit more because there's a lot less risk of losing large amounts. So in terms of what percentage of your own money would you risk, it's all based on what you're playing with. But I would say probably on average, I don't know, you'd maybe move 10% of your portfolio to BitMEX, and you'd use maybe 20% of that each trade, 10% of that each trade, something like that. But like you use your lower leverages so you don't get liquidated, because you don't want to lose it all in 5 trades and go, wow, that was fun. use your lower leverages so you don't get liquidated. So you're taking losses, but you're not losing all your money.
But at the same time as well, those slow, consistent gains are the ones that end up probably being a lot safer and a lot better for most traders. You don't want to start.
Definitely.
I'm quite happy. I'm quite happy to lock in a 12% trade, a 20% trade. It's awesome when you get a 50, 100%, but I'm quite happy just to lock in consistent 10, 20% gains. And then over the period of the week, I may have made 200%. I'm happy with that. Brad's a bit different. Brad will make 300% in the morning. But then his consistency can play around with it though. He can have 2 good days and make 300% in a day, and then the next day he might get liquidated, and then technically you've lost all those gains you just made yesterday because you made a mistake somewhere, you wasn't paying attention, or just unlucky.
Exactly what I was talking about earlier around trying to stick to your plan and find out what works for you, and trying to avoid the things that don't.
That was a perfect example, as Brad pointed out before. We had that breakout. There's so many people who would have FOMO'd into that then, thinking that we've broken out and jumped in too early. It failed. It didn't even close above. We closed below. Next candle was red, so you would almost be looking to go short here. But I'm not playing at the moment. We're just watching.
Brad, another one for you. So Eric has asked, so this next candle goes red, confirmation, you would short? Would you short?
No, that's not the case. Basically, the next candle is confirmation that we're closing under. So this next candle could go up and close above.
Yeah.
You want to wait and see what your next candle does. That'll give us an indication that if it's a red candle, that we're bearish. The next candle after that will be my confirmation. And if we close red again, I'd look to go short. So, but if this happens here, where influx of shorts come in and we end up down at around like 6.525, I'll wait. I've missed the boat.
Yeah.
So I only look to enter at the top at resistance or down on trend and support. If a candle comes and closes in mid-range, then I've missed that trade. That's gone.
Buying at the top and the bottom not only increases your gain, like the percentage amount, but it's also probably a stronger indication of where it will go. Buying in the middle of this channel would be pointless because who knows what it's doing. Say, for instance, right now we've got a red candle, you get another red candle, and then you enter here because you think it's going to go down to here. What happens if it stops halfway and goes up? Because it did it here. It's done it here.
Multiple times.
Yeah, it does it all the time. You want to be buying at the tops and the bottoms, not in the middle. Because I've done it before, jumped into a trade without really paying too much attention. And then I'm stuck in the trade for an hour waiting for it to come back down for me to exit. I don't stress too much if I enter at the wrong time. So if I had entered here like an idiot and thought it was going short, prices come up, I wouldn't have panic sold just yet. I would have been waiting for the confirmation like Brad said, and then the bounce off, and then I probably would have closed my position and taken a small 5-6% loss and just going, oh, well, I fucked up. I was an idiot. But if it failed to break and it's come back down here, I'll just keep waiting because there's a good chance price is going to come back here. I could exit for a zero loss and say I'm an idiot. I'm going to buy at a better price, or I could even just try and scalp a little bit of gain and get out. But
let the trade play out.
Yeah, let it play out. We're talking very small time frames here. So you see these, you probably used to looking at alt charts on the 4 hour. You see this sort of movement. That's like 30-40% gains on an alt chart. But we're talking like 0.05% movement here, 0.5%. Bitcoin fluctuates that much in an hour. It's not funny. So if you do get in a shit time, if you went to go long here and then realize you bought nearly at resistance, just wait. Just wait. It'll come back. Give it time. You can even scalp a little gain there. But then once you've done that, then look to go better.
Don, you mentioned, looking at the center of the action, when you get to those longer price ranges or those longer price charts and you're adding things like Bollinger Bands or even looking at the itchy clouds, would you then treat that a little bit differently when it does coming down to the center, or perhaps the center of that Bollinger Band? Does the TA or the trade sort of setup change depending on your longer time frames or the shorter ones?
I find on the smaller time frames it's not really that much important. Like we're talking about scalping the 5 minutes here. We're not really looking at long-term trades. So you're not really looking at say a an overall direction. You're just bouncing in channels. So using
just on that as well, we don't like to go to bed on a trade.
Yeah, no, never.
So that's how short we like to be in them.
Yeah.
We like, if there's times I'll be in multiple trades a night, and I look to be out of those before I go to bed.
Indicators still can be relevant on the small time frames, but they're generally not as strong. You can see, so for example, Ty mentioned the Bollinger Bands. We can see here we have bounced off the middle of the Bollinger Bands several times now. So you can see that it is some sort of support at the moment. So you could base a trade off that, but it's never as strong on the 5-minute channels. You need the longer time frames to really use your indicators to their full potential. So yeah, I wouldn't trust them too much. When we're scalping, we're not really looking at that. We're just looking for these small channels to trade in. The reason we don't really look at long-term movements is because, as Brad said, we don't really want to jump into a trade and sit in it for 2 days and go to bed, because anything can happen in that time and you could end up losing.
When you are scalping, Don, or for people who are newer to BitMEX, what time frames are you suggesting for them? Or what would you be looking at if you had just jumped into BitMEX today?
I'd be probably looking at the 15s, did you say, Brad? 15-minute candles?
Yeah, 15 to me, like I look at the 15 as more of like it's a longer short term.
Yeah, I'd say 15 minutes would give you more confirmation. I look at the 5 minutes just to see.
And I trade the fives. So I trade the fives and I look back to the 15 to give me a bigger overall picture. It gives you less candles and more information, if that makes sense.
Yeah. So a 15 is a better indication, but a 5-minute will find your specific entries and exits and see the price movement in between. Because so in these 5-minute channels, we've seen price come up and come down. On the half an hour chart, this would just be a very, very small red candle. A very, very small green candle with a big wick. So I want to see the price action in the 5 minutes. Just jumping back to the previous question.
Yeah, Eric, take a look at this now,
Yeah, Eric said, would you place a short here? And Brad said no, because he's waiting for that third candle for confirmation. So he's got it hasn't closed yet, but there's almost his confirmation that he didn't want to go short, because if he had placed a short here and this end up going up and breaking out, well, he would have lost. So that's why you wait.
And also as well, like what Brad said earlier on, he keyed it perfectly. He said, let the trades come to you. Wait for those confirmations. Wait for those setups to play out before you think about entering, because, we're seeing that bullish candle here right now, and where Don has drawn that support, that's another area where you want to look out, not just necessarily setting your longs or your shorts, but, you're always looking for different types of confirmation on many different types of factors.
Mm-hmm.
Also on that, don't these indicators that a lot of people have up, don't use one indicator to make a trade. So let's say we're at the top here at the resistance. We're looking good to come down. MACD is looking to cross over, and I wouldn't just enter a trade off one indicator. Indicators are lagging, so it's where price has been, not where price is going. So just on those, try not to use indicators solely to enter a trade.
Yeah.
Any more questions, Ty?
Guys, I think that's kind of it. We sort of brushed over some other things earlier in the session. When we say looking to the left, and we're talking about fractals and Elliott waves. Those are things that we might cover in some more advanced sessions. But we kind of feel like everyone's up to the same kind of speed now after Tuesday's session and today's session. So, we've got some more advanced things coming next week, but please let us know on Facebook and email us and wherever you can, the things you might like to see as well, because this is definitely going to be an ongoing thing for everyone.
Yeah. Cool. Well, that pretty much wraps it out if we've got no more questions.
So have we got a chat on our Discord, a discussion at all?
Yep, absolutely. Everyone can go to the BitMEX chat channel in Discord. There's also a BitMEX questions channel there as well. So we try not to talk too much in the BitMEX questions, because Don and Brad will be in there answering all of your questions each time. So we also have a feedback and suggestions channel for everything, not necessarily just the BitMEX, but also Discord too. We really like to know what you guys are are thinking as well.
We definitely love your feedback. We want to know how we can make things better and what else you want to learn, what else we can throw at you, basically.
Yeah, absolutely. We'll be back next week, Tuesday at 7:30. But in the meantime, guys, hit us up on Facebook and the socials, and let's keep these conversations going. We're always going through Facebook and Discord. Obviously, we've got everyone in Discord, so come on in, be active. But for now, everyone get the hell out of here. Go and enjoy your Friday nights and live your lives.
Yeah. All good.
Thank you all.
All right, guys.
Cheers, guys. Thank you, everyone.
See you later. Thanks for tuning in.
you.
Bye.